Alright, let's dive deeper into SoFi's upcoming earnings call. For those following SoFi, this moment feels pivotal. Will this earnings release finally be the catalyst that propels the stock price back above that crucial $15 mark, signaling a sustained upward trend? Or are we destined for a familiar pattern, a post-earnings dip that sends us back below the $10 threshold in short order, leaving investors frustrated once again? We need to analyze if this recurring cycle will repeat and, more importantly, pinpoint the specific elements within this earnings report that truly hold significance for SoFi's future trajectory. I'll lay out my precise strategy for navigating SoFi stock around this earnings event. However, before we delve into the numbers, I must issue a significant warning, a crucial piece of advice that you, the retail investor, absolutely need to internalize. This pattern of hype and subsequent disappointment has repeatedly led to substantial losses for retail investors in SoFi stock, and I'm determined to help you avoid falling victim to it yet again. So, if you appreciate receiving an unbiased, fact-based analysis without the sensationalism, make sure to hit that like button. That's precisely what I aim to deliver today. In my analysis, there are 4 fundamental aspects of this earnings report that demand our closest attention. Now, I fully acknowledge that a comprehensive earnings report encompasses a multitude of data points and nuances. I'm not suggesting these are the only things that matter, but given the current context and the need for a focused analysis, these 4 areas are where my primary focus lies. Yes, there's undoubtedly more to unpack, but to cover every single detail would extend this discussion far beyond a reasonable time frame, and let's be honest, a 2-hour earnings breakdown likely wouldn't hold anyone's interest. Therefore, we'll concentrate on these 4 key indicators, after which I'll outline my specific plan for SoFi stock and reiterate that vital warning you must heed. First and foremost, will SoFi demonstrate continued profitability? I understand that for many of you, and frankly, for me as well, this question seems almost absurd. After a consistent track record of profitability, it feels like the easiest box to tick. However, I've encountered some commentary from pundits and media figures suggesting the possibility of SoFi not being profitable this quarter. While they often lack concrete reasoning, this kind of speculation unfortunately thrives in today's social media-driven information landscape. The reality is, SoFi has delivered consistent execution for over 17 consecutive quarters, and my conviction remains strong that they will maintain this profitable trajectory. Yet, I'm hearing whispers of doubt from some quarters on Wall Street, a slight hesitancy regarding their profitability. To me, this skepticism seems entirely unfounded. There's no discernible indication to support such a concern. But it's important to acknowledge that these doubts are being voiced. Naturally, my expectation is the complete opposite. Those who are currently betting against SoFi's continued profitability are likely to face another significant setback. So, that's the initial crucial point we need to address, which seamlessly leads us to the second: will SoFi maintain its established pattern of beating earnings expectations and raising future guidance? For over 2 years now, SoFi has consistently delivered strong earnings performance, virtually always exceeding expectations and subsequently increasing their forward guidance. This has become their operational rhythm. However, as time progresses, it appears that Wall Street's reaction to these positive results isn't as enthusiastic as it once was. Frankly, SoFi doesn't seem to be receiving the level of respect it has rightfully earned. Consequently, it might require an exceptionally strong, blow-it-out-of-the-water earnings report to halt the recent stock slide and reignite significant upward momentum. Otherwise, the stock is likely to experience another post-earnings decline. But here's where a disciplined, valuation-focused approach becomes your advantage. If you've conducted your due diligence and understand the intrinsic value of what you own, you can actually view these price drops as significant buying opportunities. This is precisely why I strategically added to my SoFi holdings over 10 times last year in the $6 and $7 range, and I've continued to add this year in the $9 to $10 range. This proactive planning, thorough due diligence, and reliance on valuation enable you to recognize strong earnings and largely disregard the often irrational price action surrounding earnings announcements. This is a critical skill you must cultivate to become a successful investor, not just in SoFi, but in any stock. If you haven't yet developed this skill and are serious about your investing journey, eager to learn directly from me and see my real-time buy orders and other insights, I strongly encourage you to take advantage of the limited time earnings flash sale that's about to conclude. This offers you real-time trade notifications, complimentary courses, personalized coaching, access to live earnings call discussions with me, and much more. You'll find all the details in the pinned comment below. I'll provide more information at the end, but we need to move on to the next point, as it holds significant implications for SoFi's future stock performance. Next up, are we witnessing substantial growth in SoFi's financial services and tech platforms? This is the cornerstone of the bullish argument for SoFi. If these segments demonstrate robust growth that outpaces the lending division, it will lend further credence to the fintech multiple that we've discussed extensively on this channel. Conversely, if this growth doesn't materialize and lending continues to dominate, SoFi's valuation will likely remain closer to that of a traditional bank, which is not the desired outcome. We need these financial services and tech platform divisions to consistently deliver strong quarterly results, reinforcing the narrative that SoFi is a hybrid fintech banking entity deserving of a higher valuation multiple. We need the revenue contribution from these segments to continue its upward trajectory, ideally pushing past the 50% mark, to definitively solidify SoFi's position as more fintech than traditional bank. Naturally, the further beyond 50% this contribution grows, the stronger the case for a more favorable fintech-style multiple, which is significantly more attractive than a typical banking multiple. Finally, will SoFi adjust its formal guidance for the loan platform business? This represents one of the most promising and nascent aspects of SoFi's business, offering a compelling, very attractive fee-based income stream with remarkably low risk. It truly is a secret sauce that, if executed effectively for their clients, has the potential to generate incredibly high-margin revenue with minimal associated risk. Furthermore, I believe this business segment leans more towards the fintech model than traditional banking, which should further contribute to the multiple expansion we're seeking. But the crucial question is, will they provide formal guidance on this? Now, let's be clear. I'm aware that management has discussed their aspirations for this business in various interviews and releases. However, formal guidance adjustments for 2025 and, more importantly, 2026 could provide a significant valuation reset and offer valuable insight into management's expectations for its growth trajectory. Again, while there's been ample discussion and opinion shared across various platforms, formal guidance is the bedrock upon which we build our valuations. Therefore, I need to see that formal guidance articulated during the earnings call. Of course, even if they do revise their guidance upward and it's positive, I anticipate it will likely be somewhat conservative, a pattern they've often followed. So, I'm eagerly awaiting to see if they provide this formal guidance. If not, I suppose I'll have to exercise more patience and allow them to continue their cautious approach. So, what is my specific plan for SoFi stock leading into and following this earnings announcement? Don't worry, we'll get to that crucial warning in just a moment. It's vital information you need to understand. But first, let's discuss my strategy for SoFi around this earnings event. Personally, I've viewed the recent stock price weakness, fueled by the tariff-related market noise, as an attractive opportunity. I wasn't particularly concerned about its impact on a company like Amazon, perceiving it as a short-term headwind. So, if I'm not worried about Amazon's exposure, why would I be overly concerned about SoFi, which, comparatively, will likely experience a far less significant impact? Consequently, I've welcomed the opportunity to acquire shares of both SoFi and other fundamentally sound companies at discounted prices. Therefore, I will continue to strategically add to my SoFi position at my predetermined price targets, provided SoFi continues to execute operationally, which, once again, I have no reason to doubt this quarter. However, if the stock experiences a significant upward surge following the earnings release, I'm perfectly content to simply sit back and enjoy the ride. This is precisely why building out your positions proactively, ahead of earnings announcements, is so crucial. It eliminates the need to engage in the often futile guessing game surrounding earnings reactions. Stocks are arguably at their most volatile and manipulated around earnings releases, which often explains why post-earnings price movements can seem illogical. That heightened manipulation is less prevalent during other market periods. I already established a full core position in SoFi during 2022 and 2023, and I'm now in a position of accumulating bonus shares. My strategy for adding these bonus shares is to capitalize on periods of irrational Wall Street behavior, which seems to occur quite frequently these days. So, if the market presents another buying opportunity after earnings, I'll gladly take advantage of it. If not, I'm comfortable with my existing holdings and will simply observe the stock's performance. Now, what is that massive warning I've been alluding to? This is my primary concern regarding SoFi, particularly when I consider you, the individual retail investors. It's my biggest worry for your investment journey with this stock. And that is, you must, absolutely must, avoid all the rampant hype that has surrounded this stock over the past year, which has often been followed by disappointment and subsequent negative sentiment when SoFi's performance doesn't align with these unrealistic expectations. Steer clear of the super squeeze narratives, the claims that SoFi is reasonably headed to $75, or even $45 tomorrow, or any other similarly outlandish predictions. This is pure fantasy. When I analyze the stock based on fundamental valuation and management's provided guidance, those price targets are nowhere in sight. They aren't even a factor in my calculations. I've already conducted my 2-year projections for SoFi, and those figures don't even come close. While I certainly hope they raise guidance, it would require an incredibly substantial increase to justify those inflated price levels. In fact, it's highly improbable that they will increase guidance to that extent. Conversely, when SoFi inevitably doesn't reach $75 by the end of the month, as some might believe, please understand that it doesn't reflect poorly on the CEO or indicate that SoFi is a bad company. We saw this ridiculous cycle after the last earnings call, where the CEO went from being lauded to being heavily criticized based on a genuinely positive earnings report and solid guidance. It simply wasn't the to-the-moon scenario that some had irrationally anticipated. So, avoid both the excessive hype and the subsequent doom and gloom. Instead, focus on the underlying fundamentals. Conduct your own thorough valuation based on management's official guidance, and then align your investment strategy and share accumulation plan accordingly. Anything else is simply chasing fool's gold and will inevitably lead to mismanaged expectations and, ultimately, potential losses on a stock that has the potential to be a solid investment if treated as such, rather than a Wall Street bet-style gamble. I also share multiple in-depth videos weekly on various investment topics that I can't cover here on YouTube, including timely earnings analysis for all the stocks I hold, a complete watch list with price targets, and all my buy and sell alerts in real time. And if you're curious about my recent investment activity, click subscribe. See you in the next video.